Okay, hope everybody is having a nice weekend. Today is December 14, 2014. In this video, we're going to take a look at the overall market, some of the indexes, and some of the warning sign of might be potential problem ahead. First of all, let's go and look at this particular chart here that I got all the major market indexes here to show the progression that the market takes, to get to the point, what I call the turning point. And as you see, the major market, what we call is the flight to safety. And this pattern is repetitive. It doesn't matter what kind of manipulation there is in the marketplace or what time of the year or whatever. Believe me, throughout the entire market history, you will see these type of progression pattern repeat over and over again. There is certain things like, some of the talking head has already mentioned that as well, and I have mentioned that many, many times. Main Street don't care about the S&P 500. They look at the Dow Jones Industrial. That is the market to them. Okay, so pay attention to the Dow Jones. When the Dow Jones top, okay, that's the turning point. That's always the last one to top. And you can see from this chart here, right? Here's what I highlight with these arrows. That's where all these individual market indexes have made its recovery high since the October low. Okay, and you see the last one that it made is, made its recent new all-time high is the Dow Jones Industrial 30. Although the S&P 500, kind of follows it, right? And I have tweeted out on my Twitter stream that saying, look, watch these guys manipulate this thing and squeeze that, sneak that S&P 500 to a new record high to make it look like, there is a confirmation with the Dow Jones when it makes new high. The confirmation we need is the Dow Jones transportation, okay? And that is part of the Dow theory. A lot of people have misinterpreted, how to apply the Dow theory to actually give them the indication or the warning sign that the market is turning. Okay. Now a lot of people is looking at, transportation moving up, the Dow is moving up, confirmation, great, great, great. No, that's not how one actually use the Dow Jones theory, the Dow theory to kind of get a warning, a heads up of the market turn. So if you look at this, right, we basically have topped out, okay, at the Dow Jones transportation, okay, on November 25th at 9202.84. Okay. Then we see that, and if you look at the New York Stock Exchange Composite, the NYA, here's the top, the all-time record high here. It's back in July, right? It never had recovered. Even back here when the Dow made a new all-time high, right here back in, September, that September 19 that I post up on that turning point, right? Okay, so you can see that, and that is a composite of all the stock that is being traded in the New York Stock Exchange, not this 30 Dow stock or this 500, S&P, right? Okay, so you could look at this chart and you see the progression that all these index is getting weaker and weaker while the blue chip, the biggest, largest cap, and the value stock is continuing to make higher high. Okay, and also you have to look at when I talk about market breadth indicator, a lot of people doesn't know how to use those indicators. They're aware of those indicators, but they don't know how to use it. So if you don't know how to use it, it doesn't give you the information that you need to make a decision or assessment of where the market is, right? Especially on the advanced decline line. You have to understand how to use that. Okay, then the advanced decline line been telling us that the market is getting weaker and weaker. The participation is getting narrower and narrower. In other words, there is less and less stock that is participating in the advance to push the index to a new high. Okay, so if you don't know how to use it, don't use it, because it's really going to give you a false information and draw a false conclusion. Okay, so these are the indexes that you can see, and that's why we are seeing this turning point. And likewise on the bottom, right, and the October 9, the October 15, October 16, you can see that the progression is also made for the one to bottom, and you always see the Dow be the last one to bottom, right? So you can see that as these guys make out these low, you see this low as these indexes make. And the thing is, don't get confused with the S&P or try to put too much distinction between the S&P 500 and the Dow Jones Industrial, because a lot of times they will combine that as one, because they are basically, comprised of mostly blue chip stock and the big cap stock, right? So, but you have to distinguish those, especially the transportation, the NASDAQ, because they all are different segment, different group as well, right? Okay, and the Nasdaq Composite, because there's a lot of low price stock in the Nasdaq Composite. The Nasdaq 100 is primarily composed of the tech stock, right? And you see a lot of these heavy, large cap tech stock in that Nasdaq 100, such as Apple, Google, Amazon, Netflix, those guys, and all the machine. What I call the machine is basically the market, the big money, the smart money. Okay, that is the market. You think you and me is the market? We're little guys here, so don't fool yourself. When I talk about market, we're not referring to ourselves. We're referring to those big smart money. Okay, those are the people that know before anybody know what's going on. Okay, and those are the guys that move the market. And what we do is basically we monitor the movement by looking at the price and looking at these games that they play. And the market is really transparent. If you know what to look, it's really transparent. The data is there. They have to print those data. Okay, it's just that you have to find those data and learn how to interpret them, learn how to watch them. Okay, so if you don't know, don't use them, because the worst thing you could do is draw the wrong conclusion. All right, so this is the chart that tell you how we got to this point. So let's take a look at the the different indexes, and let me put up the chart here. First we look at the Dow Jones Industrial. You see that it's coming down, and it got back to this, the October high now. Okay, and if we take a look at the weekly, you can see that it's still, even though it's still within this particular uptrend channel, right? We can conceivably see it come down and test the lower band of this particular channel here. Okay, and that's basically what we're trying to monitor right now, and to see if we'll break this trend line, this long-term trend line. If it does, then more trouble ahead. All right. So and if we look at the next one, let's see, is the Dow Jones Transportation. All right, let me go and get back to the data here. Okay, again. Okay, if we look at the transportation, you see this little bit topping candle here, this little shooting star, right? That's when to make that new, try to get another new high in there, and it failed to do so. And also even on this bounce here, right? There's all these signs. Also, the other thing is when we look at candlestick, don't try to interpret the individual candlestick for anything more than cautionary alert. All right, because you would have to look at the following candlestick to see what sort of confirmation or non-confirmation that it tell you the previous candlestick is signaling, telling us. Okay, so you can see that you see these little shooting star, then you got a gap down with this big down candle here. It certainly tell you that there's a problem ahead, and likewise here. Right now, there are times that we got these shooting star and they actually have a green open, like this one here, right? So you can't just say, oh, every shooting star is a bad candle or bearish candle. So again, a lot of people say candlestick doesn't work, blah, 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 blah. It's not that it doesn't work. It's just that you don't know how to use it, and that's why it doesn't work. So if you don't know how to use it, don't use it, because it's more dangerous to use something that you don't understand, than not to use it, right? Okay. So, and let's take a look at the S&P 500. Again, the S&P 500, we're looking for this October high to be holding as a support, and you see what happened. It just went right to it, on last Friday. And then on the weekly, we still see it still within this channel, right? So we still, there's still more room to come down, and we still could say, a lot of these talking heads still could say we're still in a long-term bull market, but blah, 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 whatever, right? But the thing is, we have to be cautious. Really have to be cautious about this pullback. Is this pullback is going to be steeper than the October pullback, or it's going to be a shallower, or what, right? Okay, so as a trader, we have to be defensive, right? Then here's the NASDAQ 100. You look at the NASDAQ 100. Look at these, candle here, this inverted hammer candle. And look at this. Remember what I was talking about? Once we saw this little spinning top and say, hey, keep an eye on how to open the following trading session. If we get a gap down, then we get this evening star type of pattern. And indeed, it did that, right? We saw this evening star type of pattern, and it tried to make it, another new high, but it failed to get back above that. And you can see that it's kind of rolling over right now. And again, if we take a look at the longer term, on the weekly chart, it's still in a long trend, on the uptrend here within this price channel. But again, we're basically looking for this thing to come back down to that September high and possibly, maybe lower if it break that. So it's all depends how we're going to do, when all these indexes, come down and see how it react. And then here's the Russell 2000. And I thought the Russell 2000 was actually going to come up and try to reclaim this level. Then maybe, get a push on, this high here, back in July. That would be a new all-time high, and the market really give us a fake out, right? By, pushing the Russell up to a new all-time high. Then all of a sudden everybody, jump on board again and risk on. But you can see that it's actually pulling back. We got this little engulfing candle here with these two inside candle, and on Friday it's actually broken below this engulfing candle low. So we'll probably see a low coming down and test all these pivot low point here. And if we take a look at the weekly, likewise you can see that kind of flat line here, even though it seems like it's a long-term consolidation pattern. It's actually building a lower high and lower low. So it's just a matter of time. I think that this market is really flagging us to be very cautious, because the thing is, a lot of people, buying all these things about, for every penny the oil goes down, we get this $1 billion tax cut stimulus and all these stuff, and it's going to be $1 trillion to the economy and that sort of thing. These are all extrapolation. They're assuming the oil going to stay down at this level for the next year or two. Okay, it ain't going to stay down for that long. Right? You watch, the oil prices will come back up to $70 to $85 fairly shortly. How quickly? We don't know, because and how low will it go before we actually see that bounce? We don't know, right? But the thing is, there are some, what I call unintentional consequences when it gets to a certain level. It triggers a lot of, geopolitical event, a lot of financial consequences. And that's what we are seeing. The market is actually pricing some of those things right now. Because if you take a look at the junk bond market, you see this, right? It's just collapsing, because a lot of these paper is basically funding a lot of these oil exploration. The United States, a lot of these oil companies have been, issuing paper to fund their operation. And if these guys go bankrupt or go default on these things, hey, a lot of those guys that holding these paper is going to be hurting. And the same thing here on the high yield corporate bond is basically pretty much similar to junk bond, right? Those are high risk stuff. So you can see risk is off, right? So you got to pay attention to these things. So be careful. I'm not saying the sky is falling, but as a trader, we have to be always on the defense. We like to trade on the long side, but hey, the market, it is what it is, and we are basically have to trade whatever the trend, the market tell us. And if we are uncomfortable, like I said, stand aside and just wait. Okay, good luck.